There are three very important numbers that Social Security and SSDI beneficiaries need to know right now: 1620, 1950, and 2700. These numbers affect your ability to work and earn without losing your monthly benefit in 2025. And if you go over, you might be facing garnishments, overpayments, or even a suspension of your benefits altogether. Let's break it all down clearly and why this matters to so many people right now. First, a quick heads up. The information I'm covering today specifically applies to those receiving Social Security Retirement and SSDI Social Security Disability Insurance. If you're on SSI Supplemental Security Income, this video isn't about those rules, but don't worry. I've made plenty of other videos for SSI recipients, and I'll be doing more, so hang tight if that's you. But for those of you on SSDI or retirement benefits, this is very relevant. These rules affect millions of people. Now, even if you're thinking, hey, this doesn't apply to me right now, I'd still recommend listening in. Maybe you're not earning anything at the moment or aren't planning to, that's fine. But a few months down the road, things might change. You might take on a part-time job, a gig on the side, or a seasonal job for extra cash. And if you don't know where these limits are set, you could accidentally cross the line and get hit with penalties. That's the last thing we want. So let's break this down one by one. The first number is 1620. This number applies to SSDI recipients who are classified as non-blind. If you're receiving SSDI and your disability is not related to blindness, this is your monthly earnings limit. Specifically, it's the amount of gross earned income you can bring in each month without triggering a review or garnishment of your SSDI benefit. And by gross income, I mean your income before taxes or deductions. This includes wages from a job, money from self-employment, or even cash earned from selling things or offering services. It doesn't matter if you're mowing lawns, walking dogs, selling crafts online, or working a few shifts a week at a local store. If it's earned income and you're not blind, the current limit is $16.20 per month. Now here's the key thing. If you go over that threshold, Social Security considers that substantial gainful activity, also known as SGA. When that happens, they may reduce or even suspend your SSDI payments. Yes, even if you only go over by a little. Now, if you're in your trial work period, you have a bit more flexibility and can earn more without consequences. But outside of that period, 1620 is the line. If you're not sure where you stand, it's a good idea to reach out to Social Security directly. Call them, ask questions. You won't get in trouble for inquiring, and they can walk you through how the rules apply in your specific case. I've done it myself. They can help you understand what counts as income and how much wiggle room you have. Now let's talk about the second number, 1950. This applies to people who are receiving Social Security retirement benefits but have not yet reached their full retirement age. That's usually somewhere between 66 and 67, depending on when you were born. So if you've started collecting retirement benefits early, say at 62, 63, or even 65, and you're planning to work or already have a job, this number is important. Basically, you can earn up to $19.50 per month in 2025 without seeing any reduction in your retirement benefit. That adds up to about $23,400 over the entire year. But once you go over that limit, Social Security starts taking back some of your benefit. Specifically, they withhold $1 for every $2 you earn over the annual threshold. So let's say you make $1,000 more than the yearly limit. You'll lose $500 in benefits. Now, that money isn't gone forever. Once you hit full retirement age, they recalculate your benefit and give it back to you over time. But still, most people working right now aren't looking to wait years to get their money back. If you're working because you need the income, having part of your Social Security withheld doesn't exactly help you now. And again, that's gross earned income. It's not what hits your bank account after taxes, it's what you earned before any deductions. So make sure you're looking at the right numbers when figuring this out. Finally, let's cover that last number, 2700. This one applies to SSDI beneficiaries who are blind or have qualifying visual impairments. If your disability is vision-related and you're getting SSDI, your earnings limit is higher than it is for non-blind beneficiaries. In 2025, that threshold is $2,700 per month in gross earned income. Same deal. If you stay under that number, your benefit stays intact. Go over, and you risk garnishment or overpayment letters. And if the overpayment is significant, you could face a suspension of your benefits altogether. Now, I'll be honest, I've always found this rule a bit frustrating. Why should there be an earnings cap at all? If someone with a disability wants to work and is able to earn more, We should be celebrating that, not punishing them. It makes no sense that people trying to support themselves better are penalized. Whether you're retired, on SSDI, or anything in between, earning money should be encouraged, not discouraged. But unfortunately, these are the rules as they currently stand. If you break them, even by mistake, Social Security can and will claw back benefits. That's why I strongly recommend staying on top of these numbers, even if they don't affect you right now, because they very well could in the future. Say the holidays come around and you take a retail job just for the season, maybe just to get out of the house or to take advantage of employee discounts. By the way, how many of us have taken a job just for the discount? I know I have. Sometimes you see a great deal at a store and think, you know what? I'll work here for a few weeks, grab the stuff I want, and then I'm out. We've all done it at least once, right? Anyway, even for something like that, if you're getting a Social Security benefit, those earnings count. You don't want to accidentally earn a few $100s too much and then get a letter from Social Security saying they overpaid you or that you now owe them money. It's just not worth the headache. So here's the best practice. If you're thinking about working or already have a job lined up, call Social Security. Let them know your plans. Ask them to help you estimate how much you can earn without crossing the line. They'll help you do the math. And trust me, it's better to get that information up front than to deal with penalties later on. I hope this helped explain the 3 key earnings thresholds for 2025. Again, for SSDI non-blind beneficiaries, it's $16.20 per month. For early Social Security retirees, it's $19.50. And for SSDI blind beneficiaries, it's $2,700. Keep those numbers handy. Even if you're not working now, they're good to know for the future. Life changes fast. Another thing I want to quickly mention is how these earnings limits can sometimes create confusion, especially if you're doing freelance work or side gigs. Unlike a regular paycheck job, where your income is clearly tracked by an employer and reported to Social Security through W-2s, freelance and self-employment income gets reported through different tax forms like 1099-S. And if you're not careful, you could end up underreporting or even forgetting to report income, which can lead to issues later on. So if you're working gigs like DoorDash, Instacart, Uber, or even selling items online, make sure you're tracking everything and keeping records. Social Security doesn't always catch these things right away, but they often catch them eventually, and that's when the overpayment letters start. Also, remember that the earnings limits we talked about are not cliffs, meaning going $1 over doesn't instantly eliminate your entire benefit. But it does trigger action. It could mean a reduction. It could mean they withhold part of a future check. It could also mean you're subject to a continuing disability review if you're on SSDI. That's why it's important to know not just the limits, but what happens if you cross them.